Daily forecast for September 17th by FX Empire. Light sweet crude in front of you, you can see bounced off of the $44 handle, which was a pretty significant turn of events because, after all, it is an area that has been rather supportive here recently, and the fact that it continues to be is a good sign. We feel that it goes down to $43, so it's a little bit of a barrier. Now, with that, we look at this and we recognize that there is a little bit of an descending triangle being formed, and with that, you have to think that perhaps it's a negative sign. But with this, we also recognize that the market is far too steep, the downtrend line. So quite often what happens in these situations is they get broken through and then the whole thing gets negated. With all of the economic announcements that come out over the next day or two, this is going to be one of the more interesting markets to watch, in our opinion. We have crude oil inventories today, and that, of course, has a massive effect on this market. And normally, that would be enough to trade it just based upon that. But we also have an interest rate announcement coming out tomorrow, and that is going to be the most watched announcement of the quarter, if not the year. The Federal Reserve may raise interest rates, and that may bring up the value of the dollar. On the other hand, if they don't, then that brings down the value of the dollar, and commodities typically will go higher. But be wary of the initial reaction. The US dollar spiking in value may accompany higher commodity prices in the end. And the reason I say that is they may mention something about industrial demand. They may mention economic growth. That's exactly what this market needs to see to go higher. This impulsive move has been quite strong, and to completely reverse that would, of course, be extraordinarily bearish. I'm starting to wonder whether or not the smart money isn't getting in and going long. This is more of an investment, that type of thinking, and that's exactly what I've done in my personal account. Now, for shorter term traders, a break above the top of the range for this session here on Tuesday could send us looking for as high as $50. Regardless, though, be very careful. This is a buy-only market for us at the moment, at least until we get below 43, and then we can reassess things. Perhaps we head back down to 49. The Brent market fell initially during the day on Tuesday, but found enough support at 46 to turn things back around and form a little bit of a stubby hammer. This is a neutral stubby hammer candle. Really, it's not a lot to look at, but it does show at least a deceleration in the selling. Brent's going to be beholden to the same thing, value of the US dollar after the interest rate announcement, and of course the inventory numbers. Now, the inventory numbers in America don't necessarily affect Brent as strongly as they do light sweet crude, but at the end of the day, it still shows demand in general. There's been a lot of concerns about Chinese lack of demand slowing down the economy. If the U.S. central bank suggests that the economy is strong enough for not only one interest rate hike, but a couple, that could really supercharge this move eventually. Doesn't matter what they say, though. You can pretty much guarantee that Thursday, during that announcement, is going to be a very volatile time for this particular commodity. It is because of this, we break above 47, we're going to take our profits very quickly. Thursday will be a different situation, but today you're going to have to accept what the market offers and then move along. We have no interest in selling.